If you're new to this channel, this is where we talk about property investing, share smart investing strategies, and anything property related. So if you haven't already, make sure you hit subscribe, smash that like button. All right, now let's get into today's question. Question from Scott today: what impacts have you seen from the rate cuts? Thanks for that question, Scott. Let's get into it. So I guess a big thing that we're seeing at the moment is it's triggering a lot of buyer interest. So it's not just happening from investors. Us as a business here, we're probably on track to do our best month for the year, maybe even the last few years. So that's to give you a bit of an insight of what that looks like. And speaking to some of our our main broker partner as well, they've had their best year in June in 15 years. They've had their best July in 15 years, and they're anticipating going to have their best August in 15 years. And this article here touches on the fact that there's been a big impact or spike in pre-approvals coming through, particularly from first home buyers. And I would imagine that's going to be accelerated even further with the Labor government coming out and announcing that they're forward tracking the 5% first home buyer grant. So that's going to kick in from October now instead of from January, which particularly in your Melbourne and Sydney markets, that post-football season has always been a bit more of a hurry for people to go out there and buy. But I'm anticipating that's going to springboard that even further because 5% buyer entry, they've upped the price as well in terms of where that cap ends. I think it's around that $900,000 price point in that Vic market, Brisbane market, over $1 million in the Sydney market as well. So definitely going to have a lot more. I guess I like in pre-approvals to you going into a cafe, you place your order, then the kitchen gets your ticket. There are a lot of tickets being written up right now, and there's about to be a lot of chaos in the kitchen. And we're seeing a lot of news articles coming out talking about rising prices. I am definitely seeing that firsthand, having been out to auctions, whether it be for myself or I'm just one of those nuffies that loves it. And my partner, she loves walking through homes and having a bit of a sticky beak as well. But seeing what's happening on the ground as well firsthand, because when I was going out to those auctions, particularly around late February, March, you might only have seen 2 or 3 actual bidders and maybe a handful of people attending these auctions. As it sits right now, we're talking half a dozen to a dozen people actually bidding, and that's not a surprise, but there are so many people going through these open homes. I'm seeing a lot more young faces enter the market as well. So I anticipate that those rate cuts is only going to be stimulating that along as well. But also, the other thing I want to touch on is what the rate cuts are doing for the borrowing power, because that's another one where I'm seeing clients coming in where potentially they were tapped out before or weren't at the price point of where they wanted to be from their investment side. So if we look, we've had 3 rate cuts now, so 75 basis points. If you've got a household income of 150,000, which is slightly below the median price, I guess the median wage, your borrowing capacity has gone up over 50,000. But if you've got a combined income of, let's call it, and I'm saying combined household income of 250 to 300,000, your borrowing power's up around that kind of $100,000 plus mark. So think of it this way: when you get into property, just like any retail product, what stops people from getting into the market or are interested in buying is that barrier to entry into something. So if you know that you've got to pay $200,000 upfront costs to go buy the home, whatever it might be, how many people out there are sitting with $200,000 in their bank account ready to go? And also, not only sitting there in their bank account, willing to let go of that $200,000. But right now, we've got 5% home buyer grants. We've got stamp duty concessions. We've got building concessions, all these things. The barrier of entry has been lowered. So it's this flood of people looking to enter the market. And then on top of that, I'm not sure for those maybe the long-term followers along, I would like to say somewhere around that kind of September 2023 potentially, what we're seeing is consumer confidence is growing. And each month right now, we're at around that kind of 98, 99 mark. Funnily enough, consumer confidence is going up, but we are nowhere near the top of the market. So if we go back historically, if we looked maybe after the APRA lending, the Royal Commission changes, we're around that level. If you go back to 2021 though, when the market went gangbusters, we're around that 118, nearly 120 basis points. So we're on an upward curve right now, but we're nowhere near the top of the market. So if you're sitting on the fence and you're like, oh, should I get in now? Have I already missed the boat? You would still be early getting in right now. But you need to pull your finger out. You need to actually get involved because, like I said, you don't want to be buying when everybody else is buying, because instead of competing with 5 or 10 offers, you're going to be competing with 20 or 30 or 40 offers. You need to, plan. And you need to be sitting down with your bank, your broker, your accountant, your financial planner, your buyer's agent, whoever it might be. And you need to get these things in place, because trying to outsmart the market, I'm yet to really come across an investor who's really been able to do that over the life of their investing. So all positive signs there from I guess what those rate cuts are actually doing for us. But I hope you liked today's video. If you haven't already, hit that subscribe button, smash the like button as well, and we will catch you on the next one. Bye for now.